Good morning, everyone, and welcome to Principles of Macroeconomics class. Today, we are going to learn something about the principles of macroeconomics. So, our topic for today is we are going to talk about banking system in principles of macroeconomics. Now, we are going to start with banking system. So, we say a bank system is a network of financial institutions that provide various service to individual, business, and government. What we are trying to say is that when you talk about banking system, it's a network. Okay, it's a network of financial institution, and this institution provide various services to individual, business, and governments. It also facilitates financial transaction, manage money, and offers products in like loans, savings accounts, and investments. Then all these are done by this networking or banking system. The next one we talk about here is the banking. Now, what is banking? So when you talk of banking itself, what is it? Now we say that banking refers to the activity, the services, and the operation of financial institutions to manage money, provide loans, and offer various financial products, individual, business, and government. So we are going to look at the banking. Banking refers to the activities and the services and the operations that this institution use to manage money and also provide loans and also uh, financial product to individual, business, and government. Okay, that is what we call banking. So banking refers to what the banking system what undertake in order to manage the money that they will get. Then the next one look at bank. Now, you say what is bank? You say banking is a financial or institution that provide various services. So the bank refers to the institutions that provide various services, and the service they provide loans, they provide uh, loans and take interest to individuals, businesses, and governments. They also accept what deposits. They also accept deposits from individual businesses and government. They also provide loans for individuals, businesses, and government. And they also facilitate financial transactions. They facilitate financial transactions. They make law to regulate the outgoing and the incoming of financial operations. So the next one we talk about is now. Okay, the next thing we talk about refers to the difference between formal and informal banking. Difference between formal and informal banking. Now we have what is called formal banking. So formal banking. Now, formal banking refers to the various banking system that operates under rules and regulation of the central bank. They have licenses in their operation. But when it comes to the informal banking, there is no what? They don't have licenses. These banks are not licensed. Okay, these banks are not licensed. So let's look at when you look at the difference between formal and informal banking. You look at the regulation. When it comes to regulation of formal banking is regulated. Okay, so formal banking is regulated. They make law to regulate the activity of the formal banking, but the informal banking, there's no rules and regulation. Okay, uh, 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 there's no rules and regulation attached to this banking. So that is the one difference. Then when it comes to institutional structure, when it comes to formal banking, it involves licensed institutions. So all banking, formal banking have license, while informal banking involve unlicensed or registered entities. So as for the informal banking, they don't register them. As I said, yes. Then three, transaction documentation. When it comes to transaction documentation, formal banking requires documented transaction. all every money that the formal banking will get, they will make sure to write everything down and make accounts. They document everything. But when it comes to informal banking, they may not, they can choose not to document their transaction, and no one will do anything against them. But when it comes to formal banking, they are obliged to document all their financial transaction. Then we have access to when it comes to access to services, formal banking offers a wider range of financial services and products as compared to informal hot banking. As compared to informal hot banking. So that is the difference, key difference. Now let's look at examples of formal banking institutions in Ghana. So we have banking institution. Now we have one commercial bank. Okay, commercial bank. Now commercial bank, they are responsible for what? Providing financial service to the various businesses in the country. That's the financial bank. Then we have the development bank. They provide money for the various for the purpose of development in the country. Then we have the merchant bank. Merchant bank provide money to people who want to be maybe agent, mumu agent or whatever. Yes, because the merchant bank, they provide money to those who do trading. Okay, those who do trading, merchant, those who do the trading, they provide money for those people. Then we have the rural bank, refers to the banks in the various rural areas. So all these are examples of formal bank. They are formal banks because they are regulated by the central bank. Okay, they are regulated by the central bank. That's why we call them formal banking. Then we also have non-financial institution or non-bank. We have that is the non-formal banking. We have the microfinance institution, have the credit unions, we have insurance companies, we have pension funds, we have investment companies and money transfer services. All these are non-financial hot institutions. They are not regulated, okay? They are not controlled by the central hot government. All right. Now, examples of informal banking institutions in Ghana. Now, examples, we have the Susu Collectors. Informal, so the Susu Collectors forms part of the informal banking. They are not regulated by any the central bank. Then the money lenders, those who provide loans, money, they provide loans at a high interest rate. So when they give you maybe 100 cedis, they will add maybe 50 Ghana cedis in addition. So you pay back 50 Ghana cedis, which is very almost 50% of the amount that you have borrowed. So we also have rotating savings and credit association. So we have what is called ROSCAS, rotating savings and credit association. It's also institution. Okay, it's also institution. They also provide financial loan and services. For them, they are informal. They're informal credit unions. Yes, we have the informal credit unions. Yes, then we have financial. This means that some credit unions are formal. It means they are regulated by the central bank, and others are informal. It means they are not regulated by the central bank. Then we have the financial non-governmental organization. That is the okay. The next one we talk about is merit and demerit of the types of banking. Now, when it comes to merit,